episode of our interview with FSN1. So this month we have a very special guest, Feline Tan, an analyst from FSN1. Hello, Feline.
Hi, good morning, everyone.
Yeah, Feline, maybe you can explain a little bit to us what do you do in FSN? Which sector or which area do you mostly focus on when you're researching?
Yep. Hi. So I'm currently in the stocks and ETF research team. So at our research side, we normally cover stocks, and for now, we cover mostly a sectorial view on ETFs. So I do cover on both SGX and US stocks.
Right, okay, SGX and US stocks.
Yes.
Okay, and today we're going to talk more about ETF, exchange traded funds.
Yes.
So recently, exchange traded fund has started, finally, I guess, gaining some momentum, and interest of ETF is starting to gain. But maybe for most of us who are still new to investing, can you explain to us what really is ETF? What is ETF?
Yep, sure. So ETF is also known as exchange traded funds. So they are basically like a basket of securities that tracks an underlying index. So they are usually passively managed by ETF managers who just simply aims to produce a return that replicates the underlying index. So similarly, you can view an ETF something like a cross between a stock and a unit trust.
Right.
So similar to a stock, it is tradable during exchange, on exchange and during market hours. And similar to unit trust, they are diversified because, as you know, ETF contains like several individual securities.
Right, okay, so it's a fund, but we can trade it like a stock.
Yes.
Okay, and also what's the key advantage of ETF then?
Key advantages. So actually, there are a lot of advantages to ETF. So during our ETF festival, we did share a few. So maybe let me just briefly mention them. So firstly, it is definitely the cost. So most ETFs are cheaper than active mutual funds. So as we know, if all else equal, lower expense ratio, which is lower cost, will lead to a higher net return for the investors.
Yep.
So secondly is diversification. So as I mentioned, ETF makes up several individual securities. So once you trade an ETF, it usually means an instant diversification. And as opposed to holding to an individual stock, right? When you buy into an ETF, right, you are less exposed to any company-specific risk, right? So thirdly, accessibility. Right. So an ETF can help to provide access to various markets or asset classes that were previously maybe deemed impossible for retail investors. Right. So maybe let's take like fixed income as an example. Okay. Corporate bonds ETFs. So as you know, retail investors are we are not exposed to the corporate bond market. So but with the emergence of ETFs, right, we can now invest into like corporate bonds ETFs, which were previously like deemed impossible.
Okay, cool. Yeah. Of course. Talking about advantages, we also must talk about disadvantages also, right? So for ETF, what are some of the, maybe not risks, but some of the disadvantages that investors need to know about before they invest in ETF also?
Disadvantages. Okay, maybe I think one disadvantage, which is also an advantage for ETF also, which is liquidity. So we know in Singapore, right, some of our ETFs might not be as liquid as the ones in US. So as we know, liquidity is an important factor for investors to take into account, because it's usually just it directly impacts your cost. So lower liquidity means like for example like larger bid-ask spreads, and this will usually means like higher cost for investors.
Right. Okay. So if I can summarize, it's like because they are traded like stocks also, so it's almost like buying a blue chip with more liquid and versus say a penny stock with not that liquid. That's right. So we have to understand that.
Yeah,
as well.
But it's not really specific to ETF Maybe I just add.
Yeah, maybe just specific to stocks.
Yeah, for anything it's on exchange Correct.
Okay, and if that's the case, if ETF have so much advantages, for investors, especially retail investors, now, why are they not as widely known?
Not as widely known. Maybe let me just put it this way. From a global perspective, I think ETFs are actually gaining tremendous popularity over the years. So I think as of like March 2019, there are over 5 trillion asset under management for ETFs around the world, and it's actually expected to grow to about 10 trillion by 2023.
Wow.
So there are over 5,000 ETFs in the world and all over exchange. But the thing is, most of the ETFs are located on foreign exchanges, especially US. So about 40% comes from US.
Wow.
Yeah, correct. And so I guess this is one reason why perhaps Singapore investors are not very into ETFs, because they are listed on foreign exchanges. So I think that's the main reason why. But it's not really because like ETFs are not good.
Yeah.
Correct.
Okay. Yeah. So you're basically telling me ETF is very popular.
Yeah.
Just that we here in Singapore might not have get the exposure to them so frequently.
Correct.
Yeah. Okay. So right now, if I'm very interested to get started in investing in ETF because I see the benefit and I can invest directly in a basket of stocks straight away,
right.
How do I get started? What's the first step I should do?
Okay, if you mean like the technicality, well, first, because it is traded like a stock, you will need to have a brokerage account first before you can trade on ETFs. But if you mean from like your own portfolio perspective, like how should you get started with ETFs, I guess perhaps you can consider buying into broad-based, long-term market ETFs that can help you to build your own core portfolio. So for instance, like maybe the SPDR STI ETF or like S&P 500 ETFs, something like that.
Okay.
Yes.
And I understand you guys have what we call an ETF focus list.
Yes.
Because for me, when I'm trying to select ETF, I realize there's so much thousands of ETF to choose from. It's very confusing, especially if you're first starting out, right?
Yes.
And can you talk a little bit about this ETF focus list? Is it a great tool for investors who are just starting out to try and look through your ETF focus list first?
Yep, sure. So definitely yes. So one useful thing about the ETF focus list is that new investors can use it as a starting point to find out what to buy into. And similarly for existing experienced investors, you can actually take a look at our ETF focus list where we have this like tactical play category, so that you can actually use it as like an investment guide and use it to see if there's any, you can get any investment idea from a tactical play, so that you can make some allocations to a specific sector that you think that is going to do well.
Right. Okay.
Correct. So, and back to the whole idea about this ETF focus list, it is basically a specially designed list of 40 ETFs across 6 categories.
Okay.
Right.
Categories.
6 categories. That's right. So we have core equity, regional equity, fixed income, country equity, tactical allocations, tactical plays, and commodity.
Commodities as
Correct.
well. Okay.
So within these 6 categories, right, we have subcategories as well. And within each subcategory, there are actually one ETF that will be highlighted.
Okay.
Correct.
Okay. So all these 40 ETF are all
Correct.
different exposure.
Yes,
You
different
won't
exposure.
don't have one that is investing in the same thing.
No.
Right. So you choose the best of
yes,
this
definitely.
category.
Choose the best.
That's very convenient for
Yes.
us. Okay. In that the case, does your ETF focus list changes over time?
Yes, we do update once a year. So our latest ETF focus list is actually fresh on the shelf. We just updated it just a month ago, just in time for the ETF festival.
Right. Okay. And let's dive in a little bit, talking about some specific of the ETF. I understand that you highlighted 2 for me because I was also looking at which ETF to start investing in.
Yes.
You talked to me about this Invesco China Technology ETF.
Right.
It's a very interesting ETF that invested in a lot of the China technology companies.
Yes.
Maybe you want to go through with us how do you come about this ETF and why this of all the China tech ETF, why this one?
Right. Okay. So I think if you want to ask about how we choose this ETF, right, it's basically like what is our selection methodology. So should I go through that?
Okay. Yeah.
Okay. So based on like the key advantages, right, we have like a selection methodology for our ETFs in our focus list. So we have classified them into 2 categories, namely the quantitative factors and the qualitative factors.
Okay.
So under quantitative, right, we have tracking difference, we have expense ratio, and we also have liquidity.
Right.
And under qualitative, we look at the choice of index as well as the structure of the ETF.
Structure.
Correct.
Yeah.
So when it comes to tracking difference, it's basically the difference between the performance of the underlying index and the ETF. So of course, the smaller the tracking difference, the better.
Yep.
Secondly, we have the expense ratio. Expense ratio first. So as the name suggests, right, expense ratio is basically the cost. And as I mentioned, the lower the cost, the better. So definitely we choose, most of the time we look at whichever has the lowest expense ratio.
Okay.
And thirdly, liquidity. So liquidity, similar to stocks, right, we look at volume and beta spread. But something to know about ETFs liquidity is that they have two layers of liquidity.
Oh.
Yep. So they have the primary and the secondary liquidity.
Oh, what does that mean?
Okay. So the primary liquidity, right? We look at the liquidity of the underlying shares of the index.
Okay.
So generally, right, this is more applicable to institutional investors for when they are looking to make like tens of thousands of trades at one shot.
Okay.
So when they are required to do that, right, the market makers will help to buy into the individual shares to exchange one ETF for the institutional investor.
Okay.
So in this way, right, we think that the primary liquidity is more applicable for institutional investors.
Right.
Whereas for retail investors, like at least for me, we look at secondary liquidity, which is the volume traded and the bid-ask spread of the actual ETF traded. Correct.
Okay.
So of course, the higher the volume, the better. The tighter the bid-ask spread, the better.
Right. Okay.
Correct.
So for us, if retail investor, we have to look at the secondary liquidity,
Yes.
which is the liquidity of the ETF itself.
Yes, correct.
But if you are institutional investor or if you are
Yes.
a very rich man or woman, you have to analyze the primary liquidity of the ETF.
And most of the time it's for the institution, right?
Okay, great.
Correct. So that's the quantitative part, right? And moving on to the qualitative, you look at the choice of index. So choice of index is pretty straightforward. So you need to know what you're buying into.
Yep.
So what is the constituent of the index? What makes up index? Is it very concentrated to the top 10 or top 25, top 10, etc. Right?
Okay.
So actually from our FSM1 page, you can actually view what is the investment objective of each ETF. And if you scroll down, you can actually see that we recently launched like a new feature. So we released like the top 25 holdings of each ETFs. So you can, so basically you can know like what is in the ETF, what you're buying into, etc. Right.
Okay.
Correct. And the last factor is the structure. Correct.
Yeah.
So when it comes to structure, it's either physical or synthetic. So physical just means like you are buying into like the actual physical shares of the ETF.
Physical and synthetic.
Correct. And synthetic means that this ETF relies on derivatives to execute their investment strategy.
A
Correct.
derivative to execute the strategy.
Yes.
What does that mean?
So you buy into like swaps.
Oh, okay.
Yeah, correct. So normally synthetic ETFs, right, they can serve as a competitive offering for investors who are looking to buy into illiquid markets where like physical ETFs won't make sense.
Right.
Correct.
Okay. So these are ETFs that don't really own the actual
Yes, they don't.
physical assets.
That's right.
Okay.
So that's why investors need to be aware that synthetic ETFs will expose them to counterparty risk because of the usage of derivatives.
Right. Okay.
Correct.
So, but for a beginner like myself, if I'm just starting on ETF, would you recommend that I really stay away from synthetic ETF first?
If you are saying a beginner, then I would say like perhaps you can look into the plain vanilla ETFs, like the ones in our ETF focus list. They are all physical, mostly physical. Sorry, because
Mostly
of the
physical.
commodity ETF. Correct. So they're mostly physical. So I think that it is more straightforward for the investors to understand. So you don't have to be so complicated and so confused about the structure of it.
Okay.
That's right.
So as a rule of thumb, typically stocks ETF, they tend to be more physical in nature, right? At least for those under your ETF focus list.
Yes.
And under your ETF focus list, or I would say only the commodity side, you have some synthetic ETF.
Correct. Commodities.
Because it's hard for you to buy barrel of oil.
Yes, that's right.
Okay. Yeah, going back to the Invesco China Tech ETF. I'm just looking at your top 25 holdings of this ETF. You have company like Tencent, Meituan Dianping, Alibaba, and JD.com, this kind of company. So, are you saying that if I'm optimistic about this company, this is a way for me to invest in this through this ETF instead of buying the individual stocks? Or what kind of investor should be looking at this ETF?
Kind of investment. I think when it comes to like ETFs versus stocks, right? When it comes to stocks, you need to really look into their maybe their P&L balance sheet to understand like any company specific risks that these company have. But whereas like if you are very positive on the China tech, you can actually look at this ETFs because they covers like most of the major China tech companies in like China and like also like foreign exchanges of course. So I think that if you are like perhaps you lack of time sometimes, you are not gonna like dive deep into their P&L,
Every
balance
single
sheet.
company.
Correct. You can actually just take a look at this ETF that my colleague has recently talked about in this article. Yes.
Yeah, cool. We'll definitely link the article down below for you guys. A more detailed description and explanation on what really is this China Invesco China Tech ETF.
Yes.
Right. Going on to the next one that you talked to me about, it's actually a bond ETF, if I'm not wrong, right? It's the Nikko AM Sing Dollar Investment Grid ETF.
Yes.
Okay. Can we talk a little bit about that, and what am I investing in for this one?
Sure. So this Nikko AM Sing Dollar Investment Grade Bond. So as the name suggests, they invest into Sing Dollar denominated corporate bonds that are of investment grade. So like I mentioned earlier, like one of the advantages of ETF is actually like they can help you to gain access to specific markets or asset classes that were previously impossible. So I think this ETF highlights that advantage because corporate bonds market is not available for retail investors but more for accredited investors.
Right.
So but with this ETF, right, investors that who are hoping to gain exposure to fixed income can actually buy into this ETF to gain like a little bit more return as compared to like maybe fixed deposit in banks or like the Singapore government security savings bonds. So I think this is one good point about this ETF.
Right.
Correct. So with regards to the components, right, they are mostly they are 100% exposed to Sing dollar denominated bonds, and they are like 75% according to their fact sheet, 75% to Singapore issuers. Correct. 75%. So like the well-known names like the three banks, DBS, UOB, OCBC, LTA, HDB also a few of them. Correct.
Cool. Even HDB and LTA as well.
Yes.
So if you want to lend money to HDB, no problem, you can do it through here.
That's right.
Okay, that's fascinating. Can we maybe talk a little bit about their performance, right? For this one, I understand that for the bond ETF, the history is not that long yet.
Yes.
But I understand the yield to maturity right now is around 3.1%.
Yes.
Right. Is that a reasonable, I guess, expectation that I should be expecting from this kind of corporate bonds ETF?
For this one, I think
where would you think the range of my expectation should be?
I think if you look at given how most of the issuers are like from LTA, from like the banks, the very credible ones, right? They're usually ranging at about 3 to 4%, right?
Yeah.
So I mean, given this is a low risk, not entirely no risk, it's a lower risk as compared to like maybe equities.
Yep.
So definitely like the yield, I guess, is in a way is quite reasonable at about 3.1%.
Yeah.
It is like I've mentioned, it is like maybe slightly riskier than Singapore's government bond.
I have not seen DBS default before.
Yeah, that's right. Okay, yeah, so basically
so the risk
I think
will be quite low, right?
yeah, but there's still a certain amount of risk, definitely, right? But I think that it gives you a higher return as compared to like
fixed deposit.
Correct. So I think this might be a good alternative for investors who want to gain steady cash flow.
Right, but definitely don't expect your 10-20%.
Yeah, definitely not
from this bond.
Correct.
Okay, that's great. For someone who say I already have a brokerage account now with FSM1, how do I know what's going to be my charges when I invest in the ETF?
What the charges? Okay, so the charges for ETF is the same as stock. So maybe a rule of thumb is that we charge at about 0.08% across all three exchanges.
Okay.
Minimum fee of like $10 for Singapore, 50 for Hong Kong, and about $8.8 for US exchanges.
Right.
So I think at our fact sheet, right, you can actually scroll down to actually check how much are you going to get charged by keying in like the number of shares you're buying into and stuff like that. So from there you can actually know what the transaction cost. It is quite transparent for you.
Right. Okay. I saw there's even an ETF calculator.
Yes, that's what I'm talking about.
Yeah, you can put in how much you want to invest in, and they will let you. FSM1 will let you know how much of it is your investment, how much of it is the cost.
That's right.
Involved. And definitely, I would say you guys are one of the more competitive ones in the market right now.
would say so too.
If not the most competitive one. But on top of that, I understand from your colleague just now, you guys is also having some promotion right now for ETF trading.
Yes.
You want to tell us a little
Sure.
bit about that?
That's right. So following up our ETF festival we had last month, so now we are offering about 3 free trades as long as you are making a trade based on our ETF focus list.
Right.
So I think this is something interesting that you can think about.
Okay.
Yeah, and one thing to highlight is that besides like us providing like interesting ideas for you, if you buy into foreign stocks, right, we actually don't charge foreign custody fees on these foreign stocks.
Yes.
So I think this will make your investment even more competitive than before, because like you won't have like too much transaction cost eating into your returns.
Yes, yes.
Correct.
We get a lot of questions from investors. You know, they don't like to invest in foreign market because a lot of their brokers are charging custodian fees.
Yes, correct.
So you're basically telling me FSM1 doesn't
That's
charge
right.
any custodian
That is
fees
right.
for
So
both stocks and
ETFs,
ETF?
correct.
Right? Okay, that's a great advantage.
Yes.
So definitely do check them out. You can sign up for their free account on fsm1.com. We'll provide the link down below, including all the information that we discussed today and articles for you to understand more about the methodology behind the ETF focus list and detail about their 2 ETF that we talk about today. So thank you so much, Feline, for your time.
thank you, Stanley.
And I hope we can have you on board again maybe in a few months' time.
Right. Thank you very much.